Have you ever agreed to sit on a board of a nonprofit because you wanted to give back to your community? Maybe it's a charity that you care about, a youth sports organization, a church, or even a local arts program. A nonprofit whose mission genuinely matters to you. You probably joined because you wanted to make a difference, not because you wanted to spend your retirement savings defending a lawsuit. But here's the uncomfortable reality. Many nonprofit board members have no idea that they can be personally named in a lawsuit. And by the time they find out, they're usually sitting across from an attorney asking a very expensive question. Am I personally liable for this? Today, I want to walk through what nonprofit board members can actually be sued for, what your responsibilities are, and how the right insurance coverage can protect both the organization and the volunteers investing their time and effort into leading the organization. Because serving your community shouldn't mean risking everything that you've worked so hard for. Let's start with the foundation. What is a fiduciary duty? If you've ever joined a nonprofit board, you probably have heard the term fiduciary duty. Sounds like something expensive lawyers use to justify their hourly rate, but it's actually pretty simple. A fiduciary duty means that you have a legal responsibility to act in the best interests of the organization. As a board member, there are three primary duties that you need to understand. First is duty of care. This means showing up, being prepared, reading financial records, reviewing meeting materials, asking questions, and making informed decisions. You don't have to be an expert in every area, but you do have a responsibility to pay attention. If a board member consistently ignores warning signs, fails to review financial information, or approves major decisions without understanding them, that can be a problem. Next is your duty of loyalty. This means putting the nonprofit's interests ahead of your own personal interests. For example, if a construction company is bidding on a construction project for the nonprofit, you can't quietly vote on awarding the contract to yourself. Conflicts of interest must be disclosed. Transparency matters. Board members who use their position for personal gain can find themselves facing very serious legal issues. Next is the duty of obedience. This one is often overlooked. The nonprofit exists for a specific mission. Board members are responsible for making sure that the organization stays true to that mission and complies with applicable laws, regulations, and governing documents. If a nonprofit starts using donor funds in a way that violates its stated purpose, questions start getting asked, and those questions can become lawsuits. Now, let's talk about where board members often find themselves in legal trouble. Many people wrongly assume that lawsuits only happen to large corporations. That's simply not true. In fact, smaller nonprofits are often more vulnerable because they have fewer resources and less formal oversight. Let's look at some common claims. First, wrongful termination. Let's say an employee gets fired. Maybe they believe that the termination wasn't justified. Whether the claim has merit or not, the organization can be sued, and board members can be named in the lawsuit. Defending even a baseless claim can cost tens of thousands of dollars. Next, discrimination claims. These can involve age, race, gender, disability, religion, or other protected classes. Again, the allegation doesn't have to be true for a lawsuit to be brought. The cost of defense alone can be significant. Next, mismanagement allegations. This is where board members get surprised. A donor, an employee, a volunteer, or a stakeholder may claim that leadership made poor decisions that harmed the organization. Even if a board member acted in good faith, they may still need legal representation to defend those decisions. Next, financial oversight failures. Imagine financial records aren't reviewed carefully, funds are mishandled, fraud goes undetected, or financial controls aren't in place. Board members may face allegations that they failed to properly provide oversight. Donor disputes. This happens more often than you think. A donor contributes funds for a specific purpose. Later, they believe that those funds were used differently than promised. Now, the nonprofit faces questions and sometimes litigation. Let's make this real. Here's one example that I see frequently. A nonprofit executive director is terminated. The former employee files a wrongful termination lawsuit and alleges discrimination. The lawsuit not only names the nonprofit, but also board members. Even if everyone ultimately wins the case, the defense cost can be substantial. Here's another one. A nonprofit discovers a treasurer embezzled funds over several years. Donors become upset and question how the board failed to catch it. Board members are accused of inaccurate oversight. Now attorneys are involved. And one more. A major donor contributes money specifically for a community outreach program. Later, budget challenges cause the organization to redirect funds elsewhere. The donor claims that those funds were misused. The dispute escalates. The board becomes a part of the legal battle. Noticing a common theme? Many of these situations don't involve bad people. They involve good people making difficult decisions in complicated situations. And that's exactly why protection matters. So this brings us to directors and officers insurance. If your nonprofit has a board, this coverage should be a part of the conversation. D&O insurance is designed to help protect the organization and its leadership from claims involving management decisions. It can help cover things like wrongful termination claims, discrimination allegations, mismanagement claims, breach of fiduciary duty allegations, employment-related disputes, donor-related disputes, and most importantly, legal defense costs. Because even when a claim is ultimately dismissed, defending it can be incredibly expensive. One lawsuit can consume resources that otherwise would go directly to the mission. But this is where most people make dangerous assumptions. They think that D&O covers everything. It doesn't. Every policy is different, but there are some common exclusions. D&O generally does not cover intentional criminal acts, fraud, personal enrichment, illegal conduct, or situations where someone knowingly broke the law. Think of it this way. Insurance is designed to protect people who make mistakes, not people who intentionally do the wrong thing. There can also be exclusions related to bodily injury, property damage, and other claims that may be covered by different policies. That's why simply having D&O coverage is not enough. You need to understand what the policy actually says. And unfortunately, many board members never see it. If you're currently serving on a nonprofit board, here are 3 questions that you should ask at your next meeting. Question number 1, when was our D&O coverage last reviewed? Not renewed, reviewed. There's a difference. Organizations change, budgets change, staff changes, programs change. Your insurance should keep up with that. Question number 2, what are our coverage limits? Many nonprofits buy a policy years ago and never review their coverage limits. Meanwhile, legal costs continue to increase. The amount that seemed adequate 5 years ago may not be enough today. Question number 3, are all board members protected? Don't assume, verify. New board members, advisory board members, committee members, former board members. Ask questions and understand who is protected, because assumptions can be expensive. Here's the bigger takeaway. Most nonprofit board members are volunteers. They're generous people who care deeply about their communities. They aren't trying to get rich, they're trying to help. But good intentions don't always prevent lawsuits. And lawsuits don't always happen because someone did something wrong. Sometimes they happen because someone believes something was done wrong. That's a very important distinction. The goal isn't to scare anyone away from serving on boards. The goal is to make sure that good people understand the responsibilities that come with leadership and to have the proper protection in place. Because your mission deserves protection. Your organization deserves protection. And the people willing to serve deserve protection too. If you're a board member, executive director, or a nonprofit leader, take a few minutes this week and review your directors and officers insurance coverage. Ask questions, understand what's covered and understand what's not. And make sure that your board isn't operating on assumptions, because discovering a coverage gap after a lawsuit starts is the worst possible time to find one. If you found this information helpful, send this video to your board chair. There's a good chance that they'll thank you for it later. And if you have questions about your nonprofit insurance, nonprofit board liability, or directors and officers coverage, please reach out to us here at Leal Insurance Services. I'm always happy to help explain those coverages in plain English. Thanks for watching. We'll see you on the next video.